Hey traders, Nick Shaheen here looking at the VIX and the VXX. Which is better? How are they different? What the hell are they? This is the second attempt at doing this video because guess what? I mistakenly referred to the VXX a couple of times as the VIX and it was an important part. So I figured, I'll just redo it. So this is the VIX, the quote fear index that everybody knows. Average about 16, they say. It's counterintuitive because when you look at it, it's hard to pin that because it spends a lot of time, at least up until last year, it spent a lot of time 12 and under, and then it has big spikes. So let me look at the quarterly. Whoops, where are we at here? There we go, too many screens. So this is the quarterly to show you a long time. And 16 is somewhere down here. So you can see how it's not obvious from that the average because of a lot of outlier pops. So we have the dot-com bubble, we have the '08 debacle, and this one, the quarantine. So this has never happened before. Okay, in the '08 the banks were out of business, but here the whole freaking world stopped. I'm surprised they didn't go back to that, but they did last longer. It looks like it's lasting higher longer. In fact, we just made an all-time high in the market with the highest VIX ever. So the VIX has never been this high while we make new highs in the market. It's just counterintuitive. That just tells you that people are uneasy when you see the QQQ go up to these highs with, you know, the worst economic conditions ever and 12 million people out of work, you know, somewhere between 9 and 15, kind of like the cable. Hey, I'll be there between Tuesday and next year. So it's a lot of people out of work, so they say. So it's counterintuitive. So last Wednesday, every time I say, okay, how can I short this market? The easiest way, the safest way is to buy VIX calls because it's not falling. The VIX is not falling while the markets are rallying. So it's better than buying puts and then the markets rally and then you're out of money, whereas the VIX is holding better. Okay, so the point of today is to say, which is better, the VIX or the VXX? Okay, they're different. So they're different. You can't compare them. At least, I'm not a Wall Street guy, and let me tell you how I use them, okay? The VIX allows me to say something like what I just said. We're too high. We should expect a pullback because the VIX is this high. And it came. Another thing happened last week, and I'll share with you later, that told me the day I needed to protect myself. On Wednesday, before the Thursday 6% drop, I sent out a note saying, I'm buying calls on the VIX because I have questions. I'm seeing things I haven't seen ever. And that was reason to be careful. I'll share with you what I saw. So the VIX is good for those kind of statements. It doesn't help me with my trading. You go to trade it, the quotes are weird. Something at the money is not really because it's future freaking value, backwardation, and this and that. Too fancy for me. Not tradable for me. Somebody with bigger, you know, somebody who claims to be better at it, hey, whatever works for you, then you don't need to watch this video. Let me tell you how I use the VXX every day, okay? And super helpful. So this is the VXX, which is a derivative of the VIX. The way I understand it, which is something I learned today in my own chat room from one of the members, they told me the formula for it, and I put it in plain, simple English. I don't remember the formula, but my reading it and my math background tells me that it's based on shorter-term futures contracts pricing in the VIX. So it's more real to what's going on right here, right? Shorter term, like for me, under a day, maybe plus or minus 2 days, versus the VIX could be saying something like strategic, like the backwardation thing. Well, why is it a lot lower in the future than now? That maybe they just want to write out the rough patches type of a thing. The VXX, on the other hand, I use intraday, like when to buy and when to short on the daily. So today I had a situation where I used it, and in plain simple English, I put it like this. With 90 minutes to go, I laid out a scenario that played out to a T just minutes later. So I said, I think the VXX, this side, and this is the S&P. VXX, S&P. So I said the VXX could be drawing the right-hand shoulder for a head and shoulder, and it wants to break down. If that's the case, then I expect this kind of price action in the S&P, and it should, the ES, which is the S&P, closes on an upswing. And it was to the minute, and it happened. So I used the VXX. The VIX couldn't have given me this. I don't know how to make the VIX do that for me. Because sometimes the VIX is green when markets are green. Sometimes the VIX is red when markets are red. In fact, that was the case today. So the VXX, which is what this is, was a better tell for me today. And I do this all the time. It's not like it's a fluke. In fact, I said 26.25 is going to be the first level of resistance. 26.41 will be where I expect it to fail. It failed at 26.25 right there. So, ish. Eyeballing it, right? So, that's how I use the VXX, which, by the way, I don't know if I said that. It's not an ETF. It's an ETN. It's a really important point of distinction. So, I don't know if you remember. So, let's go to... So, you can see that this is a daily chart, about a year's worth of data. Let me go to a weekly chart. What? Doesn't look like the VIX, right? Yeah, it's an ETN. I think it's programmed to go to zero. So, in fact, it did go to zero not too long ago. Remember, there was a debacle, short fear, something broke, the SVIXy, UVIXy, something. Somebody was too short this and too long that, and somebody broke apart. The companies went out of business. Well, that debacle caused the VXX to die. It just disappeared. And then they reincarnated it as VXXB. And then that disappeared. They renamed it into this. Look into it. I don't know the details, but this is what I saw happen. So that's why I only use it intraday. Like, I'd never buy calls in this thing because it look at the weekly, it's just deciding to go to zero. Why would I want to buy calls in that? If anything, I'll sell call spreads on any spike. I'm going to make money blind. So that would be how I use the VXX as how to help me manage my intraday S&P trades. So this is a 15-minute chart on the S&P. If I put my lines, I send out my lines. I draw my lines before the day starts, and I send them out. So I knew today, whoops, I didn't want to move that. So I knew today, before the day started, I put my yellow lines before these played out, and I knew that there would be trouble if we lose this, and there was. And I knew that if there was trouble from the day before that, this is where they would stop, and look where they stopped. So doing this helps me plan my day. And what do? I don't panic, start buying puts right here, knowing this. So plan your day. So this helped me time this bounce, and I made money off of it. How? I sold put spreads for the day trade, and I could have left it until Monday, but it was a trade that expired today. But I decided, okay, we can do that, and I shared it, and that's how the VXX can serve me better than the VIX. So let me see if I can do that here. 1 second here. So to save time on the video, I've just added the VXX. This is the VXX. You can see how it moves opposite the ES. The S&P spiked as the VXX fell apart. And that was the scenario I did. So this shows you that they move in opposite direction. So now this is appropriate to show. Last week, before the Thursday minus 5% in the market, I sent out a note saying, I'm seeing things I've never seen before ever, and I'm going to protect myself and short the market by buying calls in the VIX. And that trade was very profitable the next day. But more importantly, I wasn't long to suffer the 5% drop. And some people shorted based on my note. What did I see? I saw that the VXX, this one, and this one, the S&P, broke out at the same time and rallied together all day. All day they rallied together. That was the Wednesday before the crash of Thursday. Today is the 11th, by the way, September 11th. So I have never seen this. I've seen them go together up or down for a few minutes, but not a whole day. So that was an anomaly that I thought was significant. It happened last Wednesday, the Wednesday before the crash, and the Wednesday before it. I noted it the Wednesday before it, and I saw it the second Wednesday. I was like, wait a minute. Somebody's prepping something big. I don't know what it is. I'm missing a piece of the puzzle. Hunker down. That was my reaction to that thing. So, by the way, markets are, don't want to say rigged, but they're well organized. So you have to be humble. This is today. Apple. right here, somebody in the chat room said, hey, look at Apple. They just put a tail at 110 out of the blue. And boom. It hit a tail of 110. That was like $2 out of spec. And 110.00. That rarely happens. And I said, I wonder if they're going to hunt it. They either are saying this is the floor or they're hunting it. And guess what? All day, they dragged down the whole market. If you look at the S&P and you put Apple next to it, the minute Apple bottomed, the S&P bottomed. And whoever made the mistake fixed their mistake. So somebody made a mistake here, and they spent all day dragging the price down to bring Apple down so they can fix their mistake. And then, okay, my bad, go about your business. Let's call them well-organized market. Is this a coincidence? No, it's not. In the last couple of weeks, I noted the exact opposite. Apple was trading somewhere, I can't remember, and then there was a spike to 137.29 out of the blue. I'd have to double check those values. And then they spent the next few hours just coming up to that number and then immediately gave it right back. And then the XLF, the day later, did it twice in 2 days. One up and one down. When it got up, I said, short it. They're going to get to that level and fade, and they did. That was the day CNBC was saying, I love JP Morgan, I love this, and I love that. Anyway, so be humble. There are some things above our pay grade, and I should acknowledge the fact that, hey, I may not have all the answers here. So this is hopefully helping somebody decide what to use, the VIX or the VXX. You can use both. I use both for two different reasons. By the way, there's also the VIX futures, which is in sync with the VXX intraday. The VIX intraday is weird. First of all, the options expire on Wednesday and they're AM settled. So anywhere between Wednesday plus or minus 1 day, anything can happen every week. So for that reason, I put it in the penalty box for 3 days out of 5 days. So it's really a helicopter tool. Like I zoom out, what do I want to say about the level of fear? There are other ways to measure fear. How do I know that the VIX is lying at 30 when the markets are doing this? When the markets are doing this, this is the S&P, the QQQ. When it was up here, the VIX was still at 25 or whatever. How do I know it's lying? When they're buying crap, when they're buying something that's 170 price to sales, zoom. That tells me there are nobody scared. Scared markets don't buy crap. Let's not call it crap. Don't buy froth. It's frothy. They buy Apple. They buy just something that pay dividends. They buy safety trades. They don't chase momentum stocks, right? So that's the point that helps me understand that the VIX is not really a good tool right now for fear. It's not. It's just a mathematical value that's too high. So this is kind of a thing. Speaking of, is this a place to get out of longs? No. Just looking at it, this was this is a kind of different kind of video. Never mind. So if I'm long here, I don't. I want to see they're going to bounce, how high they bounce. They're going to hit resistance. If they're going to pierce through it or not, they're going to come back and retest this level. And if they fail, what does that look like? Right? So we should get a bounce and then retest of that. And if that fails, we come down to this breakout zone. Not calling for it, but that's the play. Okay, so this video is turning into something else. I'm going to get out. Later, bye.